So the more investors we get, the more properties we buy, the more diversification within that portfolio there is for all investors. So that's the simple structure. And then from the platform perspective, it's really simple. I mean, it takes about 5 minutes to become a real estate investor at elevate.money. And basically you start the onboarding process, create a profile, a few questions for the regulatory bodies. And then in essence, you're doing a ID verification, choosing the investment amount, connecting your bank. We do an ACH to your bank, collect the money, you get approved, and you're a real estate investor. And that's as simple as it is. We take that money, we find, buy, and manage properties, we collect the rent, we take out the fees, and we then pay dividends on a monthly basis. So to date, we've paid a consecutive dividend payment since we've launched the platform with an annualized yield of about 6.5%.
That is great. I love that. I mean, so you guys are the ones personally acquiring the assets.
That's right. That's a great point because you will see a lot of platforms out there who are choosing to really be a middleman where they're the kind of the marketing agency and they're going out and saying, hey, invest in real estate, come on our platform, and you'll see all these different investments on the platform. But the people making the investments, you don't know much about them, and they could be 50 different people, 100 different people. And so it's really just a marketplace connecting, buyers and sellers in essence. What we're doing is we're taking that risk off the table and we're saying, the buck stops with us. So tomorrow, when COVID happened, if you had a portfolio and you bought 4 or 5 properties and 1 or 2 weren't getting yield and you called up one of these platforms, well, they'd have to either call all of these different counterparties or hand you off to them. And you're like, well, I didn't work with them. I worked with you. With Elevate, there's no one else. So we're doing the in-house management. We have a CIO who, has bought about, over $500 million worth of real estate in the space with our co-founder at their previous company. So we have a team in place that does all the work and manages all of this stuff. And that team will continue to grow as we grow.
It's kind of a chicken and egg question because you need to have teams in place who are acquiring assets. And then you're building out this platform side of things, which is really the marketing arm. Just like a lot of us as syndicators, it's the marketing arm. It just on with a very different focus and a very different way of acquiring capital. But I guess how did you guys finally form this into where you said, "Hey, this is a viable idea, and we've actually got something that we can then grow"?
So we did a survey. We thought to ourselves. I mean, Harold's idea when he came to myself and Alex was, listen, I did this before and we raised, $400,000 of assets under management in my previous, online crowdfunded platform. But we targeted a different audience. And I believe that now with Acorns, with Robinhood, with all of these Betterment, Wealthfront, all these platforms, this younger audience is looking to invest online, and there is no real estate solution targeting them, speaking to them, offering this product to them. And I believe that could be the future because, again, this is an audience that is going to grow. These investors are getting older. They're going to earn more money. They're getting in the workforce. They're, millennials and younger even, I should say, while baby boomers, let's say, who may control a lot of the wealth in the country today, they're going to be dying off and getting out of the workforce. So we're betting on a smaller investment size, a smaller capital, outlay today with a younger investor, but one that's going to continue to grow with us and be the predominant investment group in 10 years, where it's predicted that millennials will overtake baby boomers in wealth in the country by 2030. So that's the bet that we've made from an audience perspective. And so we did a survey before we launched the platform. And, the results basically said that these younger investors wanted to invest in real estate, just didn't know what to do, where to go, what to buy, how to do it, or didn't have the capital to do it. So those are all the things that we solved. And we put a deck together. We got some investors. We raised a seed round. We bought our first property. We, got our product regulated and set up by the SEC, licensed and done all of that stuff. Built out the website and started to run traffic. And we've been getting customers, and they've been investing. And one really interesting fact that I'll share is that, which we were surprised too. We didn't know the number would be this high this early, but 40% of our sales of shares per month come from existing customers, even though we've only been around, for about 8 months to the public. And what's interesting about that is about 28% of that 40% comes from auto invest. So because these are smaller increment investors, somebody might say, hey, let me invest $500, $1,000, but then I'll also put 100 or 250 every month and then build that over time. And then over the course of several years, I put in several $1,000s and then I'm reinvesting all of those dividends. So now that's constantly compounding. And that's where the power of the investment comes in. It's not like crypto or a tech stock that could go up 10, 20, 40, 100% up today, probably also won't go down